definitely have a special guest here today. I'm going to let Chris introduce our guest. We're about to bring him on. It's about to be 11:10 here. And definitely, I'm excited for this. It's really what we're doing this for, guys, is to get you guys the best information that you guys can do so you guys can make your informed trades in the SPAC industry.
Today is Julian Klymochko. He is the founder and CEO of Accelerate Funds. So they offer 4 alternative ETFs that trade on the Toronto Stock Exchange, including the Accelerate Arbitrage Fund on the Toronto Stock Exchange. That's symbol ARB. Some of our viewers and readers may be familiar with merger arbitrage and SPACs as well. But I was wondering if you could kind of explain the basic concept of arbitrage to both merger and SPACs to some of our viewers who may not be familiar with the topic.
For sure. And so merger arbitrage, it's a strategy that has been around for many, many decades. It was a strategy that Warren Buffett actually relied on back when he was running his Buffett partnership days, and he generated exceptional returns with merger arbitrage. And the way that strategy works is there's a publicly announced acquisition, and the stock will trade to a discount to the consideration offered just to account for deal risk and liquidity. And so an arbitrager would step in, provide that liquidity, buy it at a discount to the consideration, and earn that discount as the deal completes. And so if we look at just a basic example, would have been IBM's acquisition of Red Hat, which occurred about 18 months ago. IBM announced the friendly acquisition of Red Hat at, I believe, $190 per share in cash. But the first day after the announcement, Red Hat traded to about $169 in change, such that an arbitrager could buy stock there after the deal got announced and earn that roughly 12 to 13% return over the next 250 days, which equated to roughly an 18% annualized return. And the goal is to earn that irrespective of what equity or bond markets do. And so you try to make it an uncorrelated strategy. So that's a basic primer on merger arbitrage. The other type of investment in merger arbitrage, if it's not an all-cash deal, it could be all shares or mix of cash and shares, where you would buy the target, then short the acquired stock, really with the goal of locking in that spread and earning it as the deal closes once it satisfies all deal conditions, which can take anywhere from 45 days to as long as a year or even longer. Then on the SPAC arbitrage side, which is really the market we've been focused on these days in the Accelerate Arbitrage Fund, is the main component of SPAC arbitrage is that they allow you to redeem your shares at the vote. And if they don't get a deal done, then they liquidate for the underlying net asset value. So typically a SPAC will IPO units at $10 per unit. That unit will include shares and warrants. And we've been buying units in the market at or below net asset value, just so you can have that airtight arbitrage where if they announce a deal, the market doesn't like it, and then you can redeem your shares and earn that steady return, basically the same as treasuries, but you get this warrant upside. And if it's a real positive deal, like Chris, you mentioned just today, that Roth CH deal got announced, stocks up a bit. So we do have a position in the Accelerate Arbitrage Fund, which we bought that one a while ago, kind of in the spring or summer. And so if it trades up above net asset value, then the arbitrage firm can go and exit that position. So yeah, we're buying in sort of the 990 or lower space, and so we can sort of systematically exit over the next 3 months as the deal closes. So we really like SPAC arbitrage, given that it's low risk. As long as you're buying at or below net asset value, and we track net asset value on all 225 outstanding SPACs, then as long as you can hold on until completion, either vote or liquidation, then you can't go wrong with the strategy. It's low risk, consistent returns, and provides a really attractive risk reward in my opinion.
Yeah, one thing, just to jump in here, Julian, I definitely noticed the pattern kind of earlier, August time. When did the ETF start? When did you guys open it?
So I've been running that arbitrage strategy since January 2012.